Hello guys, welcome back to our YouTube channel. So guys, in this activity, guys, we are going to take a look at year-ended adjustment. So we are going to take a look at year-ended adjustment, and then I have a nice activity here, guys, whereby we can use to in order to complete what is required. And then we have required: record the following transactions in the general ledger, meaning we need to complete the general ledger and then indicate the effect on the accounting equation, meaning we are first going to do a general ledger and also accounting equation. And then guys, we have information. It says extract from pre-adjustment trial balance on the 28th February. So guys, normally I will recommend that we use steps, and then because of step number 1, it's going to be our pre-adjustment trial balance, meaning your step number 1, always whenever you do year-ended adjustment, you need to know your step number 1 is it's your pre-adjustment trial balance. And then you are going to have certain accounts there, as we have debtors control, bank, and bad debt. And then guys, we are given amounts. These amounts, they are our opening amounts. They are opening amounts or opening balances. And then guys, the financial year ends when? On the 28th February. Extract from pre-adjustment trial balance on the 28th February, meaning our financial year ends when? Ends February. And then guys, always in accounting, make sure that you have your timeline, and then it ends when? February 2021, meaning it started when? March 2020, and then it's April, May, June, July, August, September, October, November, December, January, and then it's our 12 months period. And then guys, since we have our step number 1 and we have opening balances, guys, then we need to prepare ledger accounts. And then guys, we have our answer sheet here, and then we have debtors control. Debtors control is classified as an asset, whereby it will increase under the debit side, decrease under your credit side. And then debtors control, guys, it's a ledger whereby we record all goods and services we sold on credit to our customers. And then guys, debtors control will increase under the debit side because of we hope that in future our debtors will come and pay us money. And then whenever they come and they pay us, debtors control account will be affected under the credit side, because of now our debtors are settling their amounts that are due. And then guys, we have bad debt, and then bad debt is classified as an owner's equity, which is an expense account. And then all expenses increase under your debit side, while they decrease under your credit side. And then it's an expense account whereby the business has to take out money and pay for an expense, which means it's an outflow of money in the business. That's why we say it's an expense account. And then guys, we have bank account, and then this is our bank account. It's also an asset, increases under the debit side, decrease under credit side. All the inflows of money will be recorded under our bank under the debit side, and then all the outflows of money, paying whoever paying our creditors, then guys, it's going to be recorded under the credit side. And then we have accounting equation. And then guys, now we can do we can take our information from the pre-adjustment trial balance and record it to our general ledger account. And then guys, since we said we have opening amounts and then debtors control it's 100,000, and then we are going to write and say 1st of March 2020, on the 1st we had an opening balance of how much? 100,000 under the debit side, meaning we have debtors who owe us how much? 100,000. That's why we record under the debit side. And then guys, we have bank we have 8,000, which is what? Which is favorable, which is positive. Then it's going to be recorded under our debit side. And then we are going to say March 2020, the 1st we had balance, our opening balance, which is balance brought down of how much? 8,000. And then guys, we have bad debt. And then bad debt, it's an expense account. All expenses increase under our debit side. Then we are going to have an opening balance, going to write March 2020, the 1st we have balance brought down of how much? 500. And then since we have recorded our opening balances, guys, now we can move to our second step. And then our second step will be adjustment, will be what? Our step 2. And then we read the adjustment. It says W. Willington, a debt. So now we know we are talking about a debt, was declared insolvent. A dividend of how much? Of 40 cents in a rand. So meaning a dividend of 40 cents in a rand was paid. 14,000 was directly deposited in the bank account of the business, meaning as a business, guys, we got 14,000, and then that 14,000 is a dividend of how much? Of 40 cents, meaning he pay out of the 1 rand the debtor is owing us, he only paid 40 cents, and then which is equals to how much? 14,000, meaning there was an inflow of money in the business. And then let's continue the rest of the outstanding debt. So now since he owes us how much? 1 rand, and then now he paid 0.40 cents, then now his remaining debt is how much? It's 0.60 cents, meaning now they are telling us that the rest of the outstanding debt must be written off as recoverable. This transaction has not yet been recorded, meaning now, guys, we know that this debtor owes us how much? 60 cents, and now he must be written off as a bad debt, and we don't know how much is that. And then we don't know how much. It's our X. And then now, guys, let's record this information as they told us that this transaction has not yet been recorded. So guys, then as we got 14,000, then it's an inflow of money, then it's going to go to our bank account. And then bank account, which is an inflow of money, meaning our bank account will increase. And then, guys, then let's record under the debit side, and then we are going to say we got a money as what? Debtors control. it's what CRJ, cash received journal, of how much? Of 14,000. And then guys, since now we have our 14,000, this 14,000 is from debtors control, and then in accounting we use the principle that says one account debited, meaning another account must be credited, meaning we need to credit our debtors control. And in reality guys, whenever a debtor settles his amount owing that, or the amount that is due to him, then our debtors control account will have to decrease, because of the debtor we received money from our debt, and then we are going to write that we received the money, and that money is in the bank as what? CRJ, of how much? 14,000. Of how much? 14,000. One account debited, another account credited, and we are even going to use it guys whenever we complete our accounting equation. One account must be debited while another account must be what? Credited. And then guys, we have recorded our 14,000. So now let's record the amount that is what is recoverable, meaning now we need to write off this debtor as a bad debt. So now guys, how are we going to be able to find our 0.60 cent? Then we'll have to what? Use the cross multiply method, and then it's what? 14,000 multiplied by 0.6. We are going to say 14,000 multiplied by 0.60, and then we have how much? 8,000 rand. Then we have how much? 8,000, and then equals to, and then guys, x multiply by 0.40, and then we have 0.40 cents x, and then guys, divided by 0.40. what you did on your right must be made on your what? On your left, and then 0.40 will cancel 0.40, and then we'll have x is equals to how much? And then 8,000 divided by 0.40 cent, and then how much is it? It's 21,000. So now guys, we know that 21,000 is equivalent to 0.60 cent, and it must be written off. And then again guys, we can play around with calculations guys, meaning normally I always teach my learners that the debtor will always owe us how much? 100%, which is what? In a rand. And then out of this 100%, he paid only 40%, meaning the remaining is how many percent? 60%. And then we can use the what? The known method or the unknown method. So since they gave us how much? Since the debtor only paid 40%, which is equivalent to how much? To 14,000. Then we don't have 100%, we don't even have 60%. And then we can use what? The method of what you have multiplied by what you don't have, divided by what you have. So what we have 40%, which is how much? Which is 14,000, and then multiply by what we don't have, which is what percentage? 60%. 60, and then divided by what we have, which is what percentage? 40%. And then guys, it's going to get how much? 21,000. We can also use that method. If ever you are looking for 100, then just put 14,000 multiply by 100, because of you're looking for 100, divided by what you have, which is what? 40, and then you're going to get the total amount that the debtor was owing the business. And then guys, we can take our 21,000 22,000 and record it under our debtors control account. We are writing off a debtor. We are writing off a debtor, so he no longer owes us, guys, and then our debtors control account will decrease. And then let's write off our debt, and then we are going to say what? Bad debt, and then it's going to go to our general journal. How much are we writing off? 21,000. And then, guys, one account credited, meaning another account must be what? Debited, which is what? Bad debt. And then under bad debt, we are going to say we are now having more expenses. What are we saying? So it's debtors control. General of how much? 21,000. Now we are writing off a debtor, and our expenses will do what? Will increase. And then, guys, we are done with our adjustment and we have recorded everything. So now, guys, let's close off our account. And then, guys, let's close off bad debts. And then under bad debt, we are going to say the opening balance plus the amount from the debtors control equals to how much? We are looking for the bigger side, so the bigger side is your debit side, and then it's how much? It's 21,500. And then what you did on your left must be made on your right, 21,500. And then now we need to balance our credit side. And then this thing, it's an owner's equity. This account is an owner's equity. Then we close using what? Profit or loss. And then how much is it? 21,500. And then, guys, we have bank, meaning all the time, guys, owner's equity account, even if it's an income, you close it using the profit and loss. And then, guys, we have bank. We're also looking for the bigger side under bank. We find out that the bigger side is the debit side. And then with how much? We say 8,000 plus 14,000, and then equals to 22,000, and then it's 22,000. And then, guys, we are going to write our balance carried down of how much? 22,000. So, guys, all assets liabilities will close using what? Balance carried down, as well as balance what? Brought down. But for owner's equity account, we close using what? The profit and loss. And then we are going to have what? During Feb 2021, we have on the 28th, we have balance brought down of how much? 22,000, meaning our bank is favorable with how much? With 22,000. And then, guys, from this case, now we are done recording our transactions in our general ledger. And then, guys, let's complete our accounting equation. And then under accounting equation, guys, we have account that is debited, account credited, and also our accounting equation, which is what? Assets is equals to owner's equity plus liabilities. And then, guys, normally whenever I get to prepare my accounting equation, I will have my small t accounts there for owner's equity, whereby I will have assets. All assets will increase under my debit side and decrease under my credit side. And then also have what? Owner's equity. Owner's equity will increase under the credit side because of we have what? Incomes. And then decrease under the what? The debit side because of we have what? Expenses. And then, guys, why am I writing like this? It's because of we have an owner's equity account and it's an expense, meaning all expenses increase on the debit side, but under owner's equity in general they decrease our owner's equity because of their what expenses. Our owner's equity will increase because of we have what incomes. And then guys, we have our what our liabilities. All our liabilities will increase on the debit side and decrease on our credit side. And then guys, now let's record. So guys, account that is debited, let's start with our debtors control. Under our debtors control, we find that debtors control is credited with bank of how much? 14,000. Then debtors control is what? It's credited, and then we are going to write debtors control. And then we go to bank. One account credited, meaning another account must be debited. And then under bank, we find that we have debtors control of how much? 14,000. And then bank, it's what? Bank is debited with what? With and then bank is debited with debtors control. And then debtors control is credited with bank. And then now bank, it's an asset, meaning the money was in the business. We are going to take the sign and the amount, sign and the amount, and then sign and the amount, and then we are going to record that it's what? It's plus 14,000. It's plus what? 14,000. And then guys, now we go for debtors control. Debtors control is an asset, and 14,000 is recorded under what? The credit side. And then it's going to be what? Minus 14,000 also. It's going to be minus 14,000. We take the sign and the what? And the amount. Plus and minus 14,000. And then no owner's equity, no liability. And then guys, in again, under debtors control, we have bad debts. And then debtors control is what? It's credited. And then we are going to write debtors control. And then it's credited with what? With bad debts. And then one account credited, meaning another account must be debited. And then under bad debts is what? It's debited. And then we are going to write what? The account that is debited, it's bad debts. And then bad debts, it's our owner's equity, and then account, and then it's an expense account. Then we are going to take this side minus, because of expenses are under what? The debit side. And then we are going to say minus how much? 21,000, meaning it's an expense to us. And then debtors control account, it's an asset, and then we take the sign and amount, and then it's going to be what? Minus 21,000, no liabilities. So guys, please go home and study this and rewind if ever you don't understand. And guys, I thank you so much for being with me. So guys, in the following lesson will be all about trading stock deficit and also trading stock surplus. So guys, stay tuned, subscribe, like, and press that notification buttons so that whenever I upload you are notified. So guys, it's a bang.